Hey, good afternoon, everybody. Here we have the continuous crude oil chart. We're going to continue to start off with this just so everybody can get their bearings on where we're at. Again, we are seeing this uptrend lines being supported, and we're going to continue to see that support hold until we're going to potentially break through this low on this particular day. So if we see a move below $70 a barrel, that's a move that we probably want to be selling into. Otherwise, a move up towards this $80 a barrel resistance is also a selling opportunity. Now, one thing that we've been seeing in the general marketplace is that crude oil has been a serious underperformer, and a lot of people are wondering where all the money for this grain rally is coming from. And I might go out on a limb and say that they're taking money out of crude oil as an investment and throwing it into the grains. Now, something we may look for is eventually, when these grains do see some kind of inevitable setback, this crude oil is going to look like an awfully cheap investment compared to where other things are. So as we get back down into these lower 70s here, I don't think there's a problem with buying it down there and just continuing to play this tight range, looking for either a breakout above the high that we had back here on the continuous chart, or a move below this low, or we could say even $70 a barrel. But really today we are up over $1. There's some expectations that the Fed's going to keep their policy steady, which added a little bit of support. The equity rally today also supported crude oil, and part of that was because the recession was declared over. I remember when a certain someone declared combat operations in Iraq over, and I think that could be a mistake. So whether or not this recession is over, I don't know, but I tend to see other evidence otherwise. Other than that, there are some ideas that this shut pipeline that just reopened could be seen affecting the inventory data this week, and that's another reason why we saw a little bit of a bounce. But at this point, we're going to look to play the range in crude oil and stay within these long-term up and down trends. Other than that, this is your November crude oil chart, and if we do get back up into that near $80 resistance, we are going to look to sell there. Right around these highs with this 38% retracement is probably a good spot to use as your resistance to sell against. Now here we have the dollar index. This dollar is going to be probably moving over the next couple of days with the Federal Reserve meeting. As you can see, it looks like we are in a little bit of a downward channel. Last week we were talking about the head and shoulder top that was in place. So as anticipated, this market did break last week when it took out the neckline. And you can see that this sell-off has kind of stumbled here. We might go out on a limb and look to buy this dollar index lower, assuming that the Federal Reserve does keep their policy steady. Just like the last time they did, we might see a little bit of a sell-off initially. But considering the oversold conditions of this, if we do get a retest of the 81 to 81.25 area, we're going to take a stab at being a buyer down there. Risking below this low would be just below 80, 81, which I think if you wanted to put a stop at 80.65 or 80.70, that would be pretty reasonable. And a move like that could be the short-term fire to get this crude oil back up towards the resistance where we'd like to sell it.